BSE created history, market cap now hitting something like 100 lakh crore?
Well, in fact, Tanya, in 2008, the market cap of BSE went above the 100 lakh crore mark, but it was very brief because all we know that after that there was a massive crash. But, it was a very spectacular trading day. I would say that the reception in the market to the OPEC step of not really adjusting the prices by resorting to price cuts right now was much more than anticipated. So there was a gap up opening in the market, but we build on to the gains during the session as well. Even if you look at the Sensex and the Nifty, you would see that it added on gains even after a massive gap up. But the big highlight of the trading session was actually the Bank Nifty. That was the choicest instrument of trade for traders. Over 400 points, in fact 550, close to 550 point rally in Bank Nifty. Again, look at that. There was a gap up and then there were almost double the amount of gains made during the trading session. So surely crude oil impact was the biggest one felt on Bank Nifty. But during the day, comments coming in that probably in order to go the divestment way, even public sector banks which are gradually seeing ebbing out of NPA issues may be considered for trimming their stake from the government. That was also one area which really reacted pretty well, and PSUs powered in trade. But all in all, if you saw that the interest rate sensitive pack was reacting very well. Oil stocks were reacting 8 to 10% gains in oil marketing stocks, and then the entire derivatives of beneficiaries of lower crude oil prices, stocks like Asian Paints and paint companies started reacting, oil stocks started reacting, even tire companies started reacting apart from auto and real estate. So it was almost a euphoria. But the day clearly belonged to the large caps. The mid and small caps were relatively quiet today. We've added about 1.5% this week, and bulk of that is because of the large caps. And the best part is that by the end of the trading day, you're actually looking at FII flows returning. About 1,000 crores worth of buying coming in from FIIs. DI is selling just about 500 crore. But look at what they've been doing in index futures. Close to 2,000 crore worth of buying or fresh positions have been taken on the Nifty, and we are still looking at 8,600 on the screen right now. Clearly indicates that positions are pretty loaded towards the upside. Maybe some of them would be disappointed because we are at elevated levels, and some of them would be tempted to take profits off. In fact, the GDP data, which came in after the bell, reduces the pressure on RBI governor that growth is really collapsing and there's an urgent need to rate cut, because that seemed to be one of the issues which was being discussed during the session. But net, the internals can't be better than this.
All right, let's welcome on board then our market guest. Joining in on the show this evening is Ritu Arora. She's a CIO at Canara HSBC OBC Life Insurance. Ritu, good evening. Thanks so much for taking time out for us. To your mind, what are the factors that will impact the way our markets move now in the medium term?
Thanks, Ajay, for having me on the show. I believe a lot of macroeconomic fundamentals are falling in place for India, and even the stars are aligning and helping us in form of crude prices coming off, etc. So on the macro front, we see pressure on inflation has eased, exchange rate has been steady, which now allows RBI the lead room and the elbow room to focus on growth. While I don't expect an interest rate cut, things are looking positive on the macro front. As far as corporate earnings are concerned, though, I see no improvement. The last corporate results were disappointing, and hence market at 17 times look reasonably poised. Having said that, I would add there's immense liquidity still in the system, and if liquidity continues to flow to the market, we might see further upsides from here. But in terms of fundamentals, I think we are reasonably poised. Structurally, I remain bullish for the next 3 to 5 years, but for immediate future, I think market has priced in all the hopes and euphoria.
Ritu, the winter session of the Parliament has kicked off. What are your observations so far? Do you think the government taking up some important measures like GST or any other?
There is a lot listed for the session. I'm not sure as to what all could be achieved. GST is, of course, a very important one for India, but I don't think it would be presumptuous to assume that we'll be able to resolve it within a month. But a roadmap and clarity as it emerges is all positive. And I hope good business gets done this winter session, and we see at least some of the concrete bills that have been put up getting passed. But it's a little early to foretell. The session has just begun.
Ritu, which are the sectors in your mind which could really see improvement in earnings going forward?
I think crude has a significant impact on our macros. It helps us with the twin deficit that we've been facing, be it fiscal or current account deficits. Needless to say, both have improved, and inflation stands to benefit from crude as well. So it has an all-pervasive impact on our economy and all sectors specifically. But I also worry that if crude continues to fall, it is not a very good signal, because then one starts worrying about a global deflation and fall in demand, which is not a great situation for any country, part of the global economy to be in. While we are net importers of crude, but we also export to developed economies, and would not want to see deflation all pervasive. So I welcome crude falling, and I think sectors that will continue to benefit from it would be, of course, oil and gas and oil marketing companies, but also consumption, because as inflation is coming off, the wealth factor, feel-good factor will improve, and I think consumption should come back as well.
What's your take on the Indian currency and, the fact that it's reacting to the dollar? We've seen a fair amount of weakness. Today it closed at a 9-month low, actually, and it's clearly bucking the trend because equities are going pretty strong.
I worry for currency in 2015. I believe currency will see tug of war and will see a tumultuous time ahead. And reason for that is U.S. economy is strengthening. We also see quantitative easing being withdrawn, so dollars will flow back to U.S. and also fresh investments will flow to U.S. with the revival and capex cycle starting there, which means the world's reserve currency dollar will strengthen further from here. On the other hand, another dominant currency, which is yen, is likely to depreciate further. QQE has been extended, 300 billion more has been committed to it, and the government, the central bank in Japan has said every measure that is needed will be taken to bring inflation back to 2%, which means yen will have a depreciating pressure. Euro, as we know, is facing its own challenges with growth in euro region at let's step it 0.2%, and euro as a currency will be under depreciating pressure as well. One will like to assume that China and Korea will be forced to react in this environment because there's high exports substitutability with Japan. Now, in this environment where there will be an appreciating dollar, depreciating yen and euro, India cannot be buffered. While our reserves at 315 billion is sufficient, current account deficit at 1.7% of GDP is reassuring, but I'm sure we will also be caught in this movement, and we could see our currency depreciating a bit from here. And I think this global stacking order of currencies will change in 2015 and will be closely watched, and will be a key determinant of flows in the world.
Ritu, in terms of your top picks, what are your sector underweights and overweights?
Ajay, I continue to profess and practice a balanced portfolio approach. I believe in fundamentally strong companies, so it's a bottom-up approach there. Having said that, I prefer still banking sector. I like IT sector, automobiles, capex, infra, but very solid companies within this. And I expect sector rotation to continue. So even in this year, there have been periods in time when IT has performed. There have been other periods where capitals have performed. And I expect that to continue because there's no solid improvement on the corporate result front to have a secular rally in all sectors and index as a secular rally. So we will see stock rotation, sector rotation more pronounced over the next couple of months, and hence a balanced portfolio would be the right approach to play it.
All right, Ritu, we'll let you go on that one. Thanks a lot for joining us on the show. Let's take a short break here on that note. Up ahead, a day